Good morning, Jackrabbit Club members, and welcome to our first Jackrabbit Club video where we're going to go through the portfolio and the trades that we just identified in the previous video. And as I said, go through the portfolio that I currently have, manage those trades so you could really learn just how simple and emotionless trading can be. Because we're really just going to use the weekly bars. We're going to use price action. We're not going to predict. We're just going to react to different breakouts or breakdowns. And it really is refreshing to trade this way. So what I want to do real quick is just go through some of the logistics before we get started. I currently trade 4 accounts. I have one for me, one for my wife, and then one for each of my kids. So you're going to see me jumping around back and forth because my wife and I own certain things and my kids own certain things. But as a whole, and from everything that you need to really know, we usually hold about 8 positions per account, but they're doubled. So it's really a total of about 16 different positions at any one time. It's a cash only account. They're not margin. There's just straight cash accounts, IRAs, custodials, that kind of thing. So if you see me jumping back and forth, I'm not trying to trick you or anything like that. That's the way my accounts are set up. So that's first thing. Obviously, second thing is any of these recommendations or trade ideas are strictly just that. They're educational. They're not meant to be you're going to make $1,000. You're not going to, we don't know. All right. At the end of the day, it's real money. It's my real accounts. I have no clue what is going to be the outcome of any one of these trades, but, I'm willing to take the risk for you guys. Obviously, it's something you need to make sure you're willing to take the risk. You understand fully what you're doing from a trading perspective. And as I said, this is really just to get you an idea of how simple and how effective this method can be. So with that said, we went through our stocks to watch for this week. I'm not going to be adding any of those stocks because I'm pretty much tapped out in my portfolio. If I was going to add any, it would have to come with or match up with what we have in the portfolio. So you can see here are my current positions. This is in mine and my wife's account. And so you can see we have BBY, DGX, FedEx, Glowworm. I always say Glowworm. Corning, HIG, ICE, ITW, Netflix, and Starbucks. Okay, so that's what we have here. If we flip over to my kids' accounts, they have Amazon, AVGO, Berkshire Hathaway, DHR, MSFT, RTN, UNH, and WIN. All right, so it would have to match with whatever sectors. I try to just basically each of the accounts and groups of accounts, let's say, would own 2 of the same sectors. Again, I'm not trying to confuse this any more than it has to be because it's confusing enough on my end. But essentially, out of the 16 total names, we would basically have a max of 4 in any one sector. So depending on which account it's getting added into, I have to check that. But if I were going to add any, I really like the way MSI broke out. All right, you could see nice strong breakout on this. Now, let's use this as a quick little trade example. So support, all right, so support is essentially where people are coming in and they're gonna want to buy the stock. All right, so there's a demand for the stock at a certain price. They're buying it, therefore developing a support. All right, very, very economics 101 oriented. But what really develops support is multiple areas along a specific horizontal line. So you could see if we came in and drew a line, say right in here at this 78 area, you could see resistance. Let's get rid of this. Okay, you can see that stock came up and then pulled back. So therefore, there's supply here, right? People resistance, people looking to sell at a certain price. Okay, So the stock comes up. People say, you know what? I had enough. I made a nice profit. Supply outweighs demand. Stock goes down. Demand then outweighs supply. Stock goes up. And you can see this big candle that broke out through that previous resistance. Stock continued to move and now came back. All right. So what the people down here are saying is, hey, stock now used to sell off around 78. Now I want to start buying it around 78. Okay. So 78. Now demand outweighs supply. Stock price goes up. All right. So that's in a nutshell, supply and demand, support and resistance. So when we talk about support, we're really looking at areas where people are going to buy, and where we're talking about resistance, it's areas where we think people may want to sell. Again, we're not predicting. This is just the nature of the market. So in this consolidation, a consolidation is formed when a stock is ebbing and flowing between what we're considering to be support down here. Okay, people continue to buy it when it gets down to a certain price, and a resistance, people continue to sell it when it gets up to a certain price. When we finally get a new breakout, now that means whatever happened in this consolidation, all right, all the buying and selling, now the buying is outweighing the selling and therefore pushing the stock higher, but it gives us a nice base. All right, stock's not super extended. The people that bought in this consolidation are not, ideally not going to look to flip it for a $3 or $4 profit. They're looking instead at maybe getting, a move like this where you're getting a, $10 to $12 profit. All right. So that's why it's very important in understanding why consolidations are formed, the difference between support and resistance, and what it actually is going through people's heads and traders' heads when these stocks break out and when they break down. Now, I will tell you that everything I just told you there is probably more information than you're ever going to need to know to become successful. All right. In a nutshell, that was your crash course in support and resistance. And really what you just want to know there is you're finding these resistance points. All right. You're finding these support points. You're drawing a rectangle, a consolidation between them. All right, the more times it hits resistance, the more times it hits support, the more likely that the breakout is going to hold. It could very well come back, but I trust this consolidation pattern more than if it was something along these lines where it was one resistance here, one support here. I would trust this consolidation more than I would trust this one, because you only have one point of reference on the top and bottom, where here you have multiple points of reference on the top and we have one on the bottom. Again, probably more information than you're ever going to need to know, but let's flip over and actually go into my investment accounts, and you'll see. I'm going to have it wide open here. You're going to see how many shares I own, where I bought them, and we'll go from there. But just out of, let's see. Yeah, here we go. Okay. So in this account, you can see that we are up 9.82% on the market value. That's just the one account, but we can just go into all accounts and we'll close these. So here you can see I have an open P&L of $6,800, 8.6%. Today we made $327. Don't really care about the day. That's why I really just have the P&L open on the my regular monitor tab. All right, so you're not going to see from day to day. I just don't care. All right, so P&L open is really what I care about. $6,800 in that stock, or in these trades. And they're all stock trades. Options I do for trading. That's a different story, different animal. And at some point we'll get to that. But enough blabbing. Let's take a look at some of the charts and go through and see if we need to do anything. I'm in the wrong thing. All right, so current accounts, positions. Let's go back to my account. All right, BBY. All right, so you can see I bought 46 shares on this breakout. We had a nice move through earnings, and we've continued to pull back. So in my initial stop here was 42. Okay, that was the bottom of the resistance. We got a nice breakout. All right, and now came back, had this big move higher. I identified the bottom of that big candle at 50, and that's where my current stop is. So if this comes all the way back down and doesn't bounce, then I'll get out for a loss, for basically a net, a flat trade, right? But really what I'm waiting for is, and this is one of the things that is so important, and one of the things that I love the weekly charts for, because it takes all that noise out of the market, is I'm really just waiting for a bounce. All right, if I can get a candle that closes above the previous candle on this weekly, then I'm going to move my stop up. So for argument's sake, say next week I get a candle that looks something like this. Okay, it's hard to see, but right there, I'm going to then move my stop up, and I'm going to let the stock tell me, hey, this is probably your next best bet for a stop level. DGX, all right, caught it on this breakout on a weekly chart. Very simple, similar to what we looked at. All right, have this uptrend in place, but you can see I've trailed my stop from 80. All right, we've gone up, it's consolidated again, broke out again to 90, consolidated again, broke out again to 96, consolidated again. I moved it up to 104. And now, actually, if this were to break out one more time over, say, this 110.26, I would be using this 106.35 as my stop. Again, being very patient, just understanding that it's a long-term trend. Just let it work. Okay, it's very simple. All right, here's my trade in FedEx, and again, let that come up and break out. I have no stop right now. There's no way for me to know where the next support is. So yeah, it would suck if this came all the way back down and stopped me out after this nice move, but that's the trading world, right? So it's really important to develop a process for managing those stops. All right, Corning, this is one that we talked about that I'm already in. Actually, this was in my stocks to watch video that was sent out, but I caught this breakout here. I don't know why it's so long. It should just be a circle. All right, so we caught this breakout, and really hasn't done much since, but what it has done is it is consolidating in this box again. All right, so for me, I think what I'm going to do here, being as we see these two wick lows, I'm going to just move my stop up there. All right, change this one to gray. And now, just with being patient, letting the stock work, I've taken my stop from 26.28 to 28.34, and in my opinion, taking $2 of risk off the trade. You can see I got in here around 29, and I trade very small. I mean, my accounts aren't that big to begin with, but even still, I like to only risk 0.5% on these trades. And basically what that's saying is, from where I get in to where my initial stop level is, I take my account value, figure out what 0.5% is, okay? And then I divide the price that I'm getting in. So in this case, let's use round numbers and say I got in at 30 and I want to get out at 36. Or I'm sorry, 26. So I'm using $4 in risk. If I have a $100,000 portfolio, 0.5% of that is $500. And I'm just doing some quick mental math here, and it's not meant to be quick or confusing, but it's really just math. All right. So again, $100,000 portfolio. I want to risk 0.5%, which is $500. I know that my max loss on the trade, assuming that I can get out, I usually try and figure a little bit more. So say it's $5 between the spot I buy it and the spot that we're going to eventually sell out of it if we're wrong. So say that's a $5 change per share. 500 divided by 5 means I could buy a max of 100 shares and risk the $500. All right. So that stuff we'll just go through and continue to go through. And like I said, it'll just eventually become ingrained in your head, and you'll be able to spit it out just like I did there and probably confuse everyone. But it sounds good. So, again, very simple. just calculation. HIG, all right, we're moving higher. You could see that we came back. We had a nice continuation out of the breakout, pulling back, but we will see maybe moving the stop up to this 48 level eventually. Right here, this technically is another consolidation within a larger consolidation. ICE, all right, similar situation, uptrend, found the consolidation, found the breakout, just the same way I did in that other video. I went through my scans, and it fits in my portfolio as far as sector analysis, and continued to move. Now ITW is one that you can see I have a substantial position size in. Okay, I have almost $7,000 in this, so this definitely is my largest position, and this candle concerns me. So what I'm going to do on Monday is I am going to sell out of half the position, realize about a $500 gain, because it'll be 28. You'll be just about $20 on 28 shares. So I'm going to take a $500 gain, get back to a position size that I'm a little bit more comfortable with, because this one has run, and it looks like maybe we're going to pull back a little bit here. I want to take some risk off the table, and that's perfectly fine too. It's not all or none all the time. As I said to you guys in the initial video, my Apple trade, I took it off in 2 pairs. And that may be what happens here. Maybe I get out at half now, and this thing comes all the way back down and breaks 136, and then I get out of the other half. But I don't want to keep that full position size on, so I am going to take half of that trade off. But you could see, we're simply managing the stock based on weekly consolidations and weekly breakouts. It's not harder than that. It doesn't have to be harder than that. Netflix is a perfect example, similar to what we were talking about, I think, in BBY. All right, we had this nice move up. Now we're getting back and back. And now we got that candle that I'm looking for in BBY that I was hoping to get this week, where it broke out above the previous candle. So now what I'm going to do is I'm going to actually just trail my stop up to that candle low, all right, and take some risk off the table there, and just let this thing run. All right. Now, if I really wanted to, I could add to my position here on this pullback. All right, that's a valid option. I could take the money that I'm going to take out of ITW and put it into Netflix. But you can see, again, pretty substantial size in Netflix, at least for me. And it's something that, I'm not sure if I would actually be able to add too much more, because based on the initial purchase around 148 down to 139, so like $9, and right now this would be 158 to 147. That would actually be like $11. So position size is probably going to stay the same just by a function of math. Last but not least, Starbucks, and you can see here, Starbucks I had bought on the breakout. It's come up, all right, pulling back, and we've identified this area here as a new stop level, but we're holding on to that very, very slightly because we use closing stops. So we're sitting basically right on that level there, because I'm considering this 3 or 4 week pattern as another consolidation with another breakout. So that's how we were able to trail up to that level. And now we've just had this big move back. So any further weakness, any close under this, say, 59.81 area, I would be out of that trade. All right, let's switch over to the other account, Amazon. All right, continues to work. We'll just speed through these. Continues to work, and potentially maybe on another breakout where we actually close over that $1,000 level. Maybe we're going to trail stop up to this 926 to take some risk off. AVGO, all right, again, move out of consolidation, pulling back, so can't really trail a stop yet, but looking for it to reverse. BRKB, all right, so here's one that we've added to 3 times. All right, bought here, added on the secondary breakout, pulled back, and added on this next breakout. All right, you can see now after this week we had a pretty tough week. All right, but 162 is the stop on all 3 of those purchases. All right, if that doesn't work, I'm out, and I'll probably be basically flat on that trade. But again, right now, having a substantial amount of money in that trade, just want to keep that stop tight, and you want to honor those stops. It's important you honor those stops regardless of what you think. Price action is telling you something different. This could very easily be a head and shoulders pattern, where you have the shoulder, the head, and the shoulder. Or it may turn out that it comes back to 162, bounces, and then we're up at 180 before we know it. We have no idea of knowing, no way of knowing, and really, you have to just accept what the market gives you. DHR, okay, consolidation, breakout, pullback, all right, move the stop up, simple stuff. Microsoft, you can see I've been in Microsoft for a while, trailed my stops multiple times, and actually it was looking good this week again, so we may be able to even trail on any further strength, maybe it'll trail higher, but holding on to a nice position there. RTN, one of my more recent ones, broke out and really has done nothing since. UNH, all right, UNH, really good position here, going from that 145 and moving higher and higher. But you can see all we're doing is just simply trailing stops, and when we get up to these points here, you have to be willing to let the stock pull back a little bit, kind of feel out where the next stop level is going to be, and accept the fact that you're going to lose some money here, but you may make more in the long run. And finally, win, a little bit different but similar to those trades we talked about in the video earlier, where it's pulled back, consolidated, and is now moved higher. So that's really what I do in a nutshell every single Friday, Saturday, Sunday, whatever day it works out. This week it worked out on Friday. I'm actually doing this. It's about 10:30 at night. But I hope that kind of gives you a little bit of a glimpse as to just how easy it is to let those winners run. And as I said to you, if you look at the account statement, we're sitting at $6,800 in profit. I can tell you that I've closed out, probably another $4,000 in profit throughout the year, because these stocks, don't forget, or these trades, they're long-term trades. Some of these trades I've been in for almost 9 months. And my Apple trade that I showed you guys in the video, Apple, all right, there's the Apple trade. All right, so you can see I identified an area, came up, hit channel resistance, similar to what we're going to do with ITW. We're going to take half off. So that trade right there was a $1,500 winner in Apple, but it spanned over a period of, I think it was like 200 and something days. Adobe, similar situation. Okay, had to moved up, and we got really aggressive in trailing the stops. All right, because it hadn't made a previous a close below a previous low. All right, so we continue to just trail the stops up. No rhyme or reason as to why stock does what it does, but in this case, it wasn't giving me a chance to wait for a consolidation to form. So I got aggressive. I modified my process and trailed stops to previous lows of the candles, and it went from January to June without making a closing low below a previous candle's low. All right, so you can see every one of these candles, the low is always higher. Okay, didn't close below. It was super close, but didn't close below. All right, higher, 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 again, higher. And then finally here, it closed below. I got out of the trade. Now it looks like it maybe is just consolidating at a higher price. Another breakout, but it's so extended for me here, I wouldn't even take it. Another trade I showed you in MRO. Again, this is why you monitor. I don't know why the drawing set, but this is why you go through and follow your process, because I think, oh, there it goes. Again, I got out when it broke support. I took a loss of $440 compared to those other two wins of like $1,300 and $1,400. And what's MRO done since? It just continues to go down. All right, so follow the process, trail your stops, let those winners run, try not to overthink, and remember, until next time, stop predicting, and start reacting. We'll catch you in the next one. Take care.